Hi everyone, welcome back to discuss our Indian equity markets focused weekly magazine Bottomline's current edition for the week 29th April to 3rd May, which is a truncated week with only 3 trading days. Now, the Indian benchmark indices are trading near their all-time highs. Result seasons have already started, and so far we have seen a mixed bag of results. For example, in the cement sector, ACC results were not so encouraging. If you go to see Ultratech results, they were quite outstanding. Now, looking into banking space, HDFC Bank results were quite good, while Axis Bank results were flat. Now, whereas Yes Bank reported a net loss of 1500 crores due to increase in provision by 9 times. This was one of the worst results declared by Yes Bank in last 12 to 15 quarters. Now, next month is a very crucial one for the Indian economy as the general elections have started. Out of 7, 3 phases of elections are already done. Now, the quarterly results and the election results will be the deciding factor for Nifty and Bank Nifty's next move. Now, moving on to the Nifty's technical view, last week was a very volatile week for the Nifty indices. During the week, the Nifty opened the week lower and slipped down to its support level of 11,550, but by the end of the week, it recovered and ended the weekly session flat. So overall, for the past for the past 2 to 3 weeks, the Nifty index has been trading in a broad range of 11,550 and 11,760. The lower end is acting as a good support, while the upper side, the 11,760, is acting as a good resistance. The 20 DMA, which is placed at 11,650, is also acting as a good support for the index. Now, looking into the momentum indicators, the RSI is trading into a falling channel, and only a break above the channel's resistance line will help the index regain strength. The trend indicators are also not so encouraging, which is a common factor during a range-bound market. The, uh, the, the, the volatility indicator like Bollinger Bands are trading sideways, and the bands are quite squeezed. The bandwidth indicator, which suggests which is near its 10th month low, which says that the volatility has squeezed, and we might soon see expanded volatility in the weeks to come. The India VIX slipped from 24.38 to 21.46 during the week. Although the VIX declined, the value remains at a very high level. This means that the traders are expecting high volatility in the Nifty index going forward. Now in the week gone by, we have also completed the April FNO expiry, and the Nifty rollovers during the expiry stood at a massive 81%, which is higher than the previous 3 month average of 61%. Now, open interest have also increased to 2 crore contracts for 1.92 contracts. So the open interest have increased, and the absolute and the rollovers have also increased, which suggests that the Indian market's bullish trend is still intact. Now, looking at the Nifty's option chain, the 11,500 has the maximum open interest outstanding. Now, this could be a strong support when the index slips at this level. And the 11,700 level also has a good amount of open interest. Now any minor correction in the index might find a halt at this level. On the upside, 12,000 has the major call writing. Now it says that any major rally from this level might might see some selling pressure at 12,000 level. The Nifty PCR, which stood at 1.23%, suggests that the bulls are still in the control. So the option change and the derivative data, the overall trend looks quite strong. So currently the Nifty is trading in a range of 200 points. Only a break on the upside would lead the bulls to regain strength. So our view on the Nifty index remains that we could enter a long position above 11,800 with a stop loss of 11,700 and a target of 12,000. Or if index correct to our support level of 11,550, we can enter at that level with a stop loss of 11,480 and target of 11,750. The possible upside in both the cases is around 1.73%. Now moving on to Bank Nifty index. Now the Bank Nifty index is also trading in a range bound manner, but unlike Nifty, the range is a bit tilt upside. The Bank Nifty also traded on a very volatile note. On Friday, it finally ended its weekly session down by 210 points or negative 0.69 points at 30,000 level. Now, 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 if you look closely, the Bank Nifty index is trading in a rising channel. During the week, the index bounced up from this channel and it is now trading just below the 20 DMA, which is acting as an intermediate resistance for the index. Now, if you look into the indicators, the RSI is also trading into falling channel like it was doing in Nifty. So only a break above the channel's resistance line will help the index gain strength. The ADX indicator is indicating the same thing, that is, it is trading below 40 level, and uh, and and the trend is sideways. But the overall trend still remains bullish because the positive DI indicator is above the negative DI. The Bollinger Bands are again showing squeeze in the Bank Nifty index, which says that a big volatility move is about to come. Now the derivative data, the Bank Nifty rollover stood at 75%, which is at par with the previous 3 months average. The outstanding open interest stood at 17.6 lakhs as against 22.8 lakhs. So the roll data isn't giving us any concrete signal. Looking at the option chain, the 31,000 strike has the maximum open interest, but the strike price is too far from the current level. But a decent OI build-up is also seen at 30,000 call strike. This might act as a hurdle for the bulls. On the other hand, a good amount of put writing is observed at 29,500 strike, which could act as a good support for the index. So from the above study, we can see that the overall view on the Bank Nifty index is still bullish. Now we might see the index. Now the index currently bounced up from the channel support line, which was placed at around 29,900. So we can expect the index to touch the channel's resistance line, which is placed at 30,800. Now, provided it crosses above 30,000 level, which is a 20 DMA resistance. But if the index slips below to 29,500 level, we could see bulls coming in. But a break of this level would help the bears to take over, and the downside might continue. Now, the stocks that our team is looking for is LIC Housing Finance. Now, the stock has given a decent correction from 553 levels. It is now currently placed at a strong support level of around 500. This support is quite provided from the horizontal line and a few Fibonacci clusters. So our team has a view on this stock that we'll see a decent, if we find any reversal in the stock, we would enter and make a good return on it. Next stock that we're looking at is JSW Steel. Now, steel sector has seen quite a good momentum as Tata Steel has declared its quarterly results on Friday. The company had posted a good quarterly results, and due to which the momentum was seen in the entire steel sector. Now a good result in the steel sector might help other stocks also to gain momentum. The stock that we are looking for is JSW Steel. Now the stock has formed an ascending triangle pattern at the bottom level, which suggests that the accumulation is going on from the weak hands to the strong hands. A break above 300 level would help the stock to regain momentum, and a target of 350 is what we are looking for. The target is decided from the patterns, the ascending triangle pattern. The open interest that was developed during the decline was also quite strong, but for the last two expiry, this bearish open interest has vanished. So this could also push the prices up. So overall, we are looking for 350 level. Overall, we are looking for 350 level post the stock breakout of 300 levels. The next stock that we are looking for is Cummins India. The stock is trading in a very sideways range. A break of the range upper hand, break on the range on the upside will help the stock to regain its upside momentum, and we can enter once the stock confirms the breakout. And lastly, we are looking at Tata Steel. As I mentioned a few minutes ago, that the company has posted a very good results, so the momentum might continue for a while. But since the stock is trading in a downtrend, this could quite worry a technical analyst. But the volume in the previous section was quite good. So a break of 560 level could be a very good breakout for the stock. So once the stock breaks this level, we might see the downtrend negating and the uptrend might start. So once a breakout occurs, we might see a possible target of 18.42%, which is a target of 630. Um, Thank you. And as a standard disclaimer, all the views expressed in this magazine are informative in nature. There is a subscription facility of this magazine at our website sharatmishra.in, and standard terms and conditions, and disclosures, disclaimers, and terms of the sites are used. Terms of the style used are applied for this product. Thank you. Until next time.